All right, and welcome everybody. This is Nerd Stock Talk, episode 6, and we live stream this every Saturday at 8 p.m. Eastern Standard Time. And JP Waldman can be seen at. Oh, hey, guess what? We got someone watching. There we go. We know that guy.
Hey, we know that fella. Hey, fella.
Bryce from Boston. All right. So what we're going to do, we're going to just talk about our picks from last week, and then we'll jump into our feature segment, which is socially
responsible investing.
Socially responsible investing, and we'll talk about ESG scores and all that kind of fun stuff, and then we'll jump back into what we're looking at the coming weeks. So as we do, we always start off with third place, second place, first place. So let's start off with who got hit the hardest with their picks last week, and we'll start with JP. JP, what's going on with your long pick and then your pick for this past week?
I thought we talked about this before the show backstage, and we weren't going to talk about this. I had just gotten over it. I sort of gotten over it. I put it out of my mind. I was looking forward to a new week on Monday. And then you went and brought it up again. So let's move on.
That's what he does.
Yeah. See. Yeah. So, but you know what though? I still have faith, as we say. So your Canoo, this is over the past month. It's been down 16%, but it was a rough last week. I think if we take last week out, things were.
And
it appears as though his Canoo is sinking.
I'm
the funny one.
These are volatile stocks. I'm not too worried about this yet.
He says when he loses. When he wins, he's like, these are the best stocks ever, and they only go up.
All right, then I'll talk about what I got here. So second place, that would be me. So Tencent, over the past month, has gone down 2%. So it's and there's some regulations that were happening too with inside China, and I think that has some to do with it. And we mentioned last week, we were raving last Saturday about ARK ETFs.
You were.
Yeah, but you watch it. You're talking about it. You're talking about ARK ETFs.
I was not.
You were not. You were talking about the ARK, the innovation ETFs, and we're talking about how it was basically that's super cool. It's like Blade Runner and all this kind of fun stuff. Now, you sent to me a message. This is how it goes. In our chat, Mike says, "Sell ARK. No time to ask questions. Just sell ARK ETFs right now." So
it was actually JP that said that.
I'm sorry. Yes, yeah, JP said that. Yes, JP said that. So JP, what's there's a liquidity issue?
I know?
Yeah, or the liquidity issue.
Kathy Wood, who is the person that picks the stocks that are in these funds, she and I are dating.
So it was an insider call? Is that
yeah, it was a little bit of insider
evidence of insider trading.
Really shouldn't have.
I don't think the SEC is going to go after your like 30% loss though.
I wish you would have given me a heads up before we. Truth be told, I heard on NPR, I believe it was.
Yeah.
Several days before I sent that message, which I think was Wednesday, Thursday.
Yeah.
That what was likely to happen if the bond market, the treasury yields increased as they did, was that a lot of these institutional investors were going to be pulling their money out of the stock market and moving into bonds rapidly, causing the stock market to decline. And as of late, a lot of institutional investors moved into ARK, and that was one of the things that caused ARK to go up so much over the last 3 months, was these institutional investors. And then as the Jay Powell testimony moved on and it became clear that bond yields were going up, that's when I sent the message, because I was a little too late to sell. My capital was sort of tied up, and I had backed myself into a corner with some options, and I wasn't able to sell this underlying shares. So I buried myself into these stocks that I am stuck until things come back up. But I'm hoping that you got out.
I was looking at that because I did see that there were some other articles out there talking about how specifically the ARK ETFs, they compared it to some of the some of the ETFs that existed before that kind of like spiked up really high and then seemed to crash down, but they ended up leveling off. So I pulled out of ARK for now until it kind of levels off a bit. I think they're still good long-term investments.
Yeah, I mean, it's a great time to buy right now.
Yeah.
If you got out at -3 or 4 or 5%, and you pick up now, there's definitely some gains to be had. These are going back up. It's just that all those institutional investors selling and moving to bonds every quarter. These mutual funds and hedge funds have to reallocate their assets. So it's earnings season's the end of the quarter. So that's what we're seeing.
Yeah. And Mike, you weren't here last week, but you do still have your long. You still have your long on here, so you're long showing. You won for your long pick. So for Sensonics, plus 43%. So in the past, month,
so you know what's really cool about that is, I bought it at $3.84 something like that a share. I bought 100 shares, and I was like, I want to buy 100 shares, and I'll try selling a call. Right? I sold a call. I sold this call for $8 a share, knowing that if it got called away, that I'd still have more than doubled my money. So aces to me, and they paid me $185 to do it, which reduced my cost per share to $2, which means it's great. I love it. Hopefully if it goes all the way up to 8, awesome. I got a little nervous last week because it was getting close, and I'm like, oh man, I don't want to sell that right now. Yeah, but it didn't.
Cool.
So
all right,
it's good times.
All right. So we got some people saying hi to us. Rob Liberty. Rob, how you doing?
Hey, Rob.
And we got also my wife just said, "Hey, great job, guys!" So thank you. So make sure are your wives watching too.
my wife goes to me because we have terrible internet. She goes, "Okay, so at what time can I turn on the television?" Really?
Good. So I would say, like I said, we got some good. We'll talk about what we're looking at the end of the show. But so as I say, I think this past week it was. As you mentioned, was it the bonds? What was it? The bond yield? What was that?
The treasury yields.
The treasury yield. Okay.
So basically, interest rates are going to be going up.
Yeah.
And when they do that, it's more lucrative it's safer and more lucrative to put your money into bonds, U.S. Treasury bonds, than risk it in the stock market. If you're guaranteed 3 or 4% return, why would you risk a 50% loss for that 5% or 6% return in the stock market? So that's really 10,000-foot view. That's what happens. So a lot of these mutual funds and institutional investment firms have reallocated into treasury bonds, which has caused the stock market to take a dippy do.
Yeah. And we had, so it did go down. It was the stock market did go down. I think all like the S&P, NASDAQ, and the Dow, they all kind of ended lower than they started last week.
But a lot of these transformative technology, EV, electric vehicle stocks, Tesla, all these very rapid growth companies are what took it the hardest. They declined a lot more than the rest of the stock market did because of that. They were, these institutional investors were heavy into these companies right now because of the growth potential.
Right. And as we mentioned before, and we'll say, I think we should say it every show. It's like, and I love what you said, JP, a couple of weeks ago, is buy the rumor, sell the hype. So if you're watching this and you're hearing something just like on like the major news networks, is probably already overpriced. So
yeah, exactly.
Yeah, on the major news networks, but there are like there are other sources of news that you can, and even on the major news networks, if you can read between the lines and make assumptions based on what they're saying, and maybe you can maybe steal a march, is all I'm saying.
Right, and we talked about it, also too, is that everybody watching this or listening to this is an expert in something. And if you're an expert in something, that means there's probably a product involved in that thing that you know. So look at what you know, because that's when we talk about buy the rumor, sell the hype, is that you're probably already hearing about, say you work at Best Buy. Say you're working at Best Buy and they say, oh, HP is going to come out with this, this, or there's a new video card coming up by NVIDIA or AMD. You're going to have that information well in advance before the average consumer is going to know that. So that would be an opportunity.
Be careful, though. If you work for a publicly traded company and you receive information about what's going to happen at that publicly traded company, and you then, do purchases in the stock market, you can, get in trouble for insider trading. So, yeah.
I'm sure a guy working at Best Buy isn't going to get stuff for insider trading when they say there's a new computer coming out next month that's going to have a new video card.
Hey, how do you know? How do you know? Like the little guy always loses. So,
No, as an example, if you're talking about if you're working at a, if you're working at a car dealership and they say, oh, the new 2022 cars coming out and it's going to have this updated rear view camera system on here. And he's like, interesting. I wonder who's putting that out. Everything that you're involved with, everything you do and everything you do professionally, your work or your hobby, you're passionate about, and you're going to ask the questions, basically, ask the questions on how is this going to affect these companies in the future. So, and vice versa, if you hear about, this new computers come out and they're going to take this out, like, well, that computer's not going to be worth much. So then ahead of time. So this is the important things, is that you're going to have access to information that you're passionate about and utilize that information. So, yeah.
Indeed.
Yeah. So want to jump right in and talk about socially responsible investing?
Yeah, let's do that.
All right. So one thing that we talked about, and one of the topics that we were chatting in our chat offline is, I mentioned a stock that I was looking into, and JP was like, wow, why that? That's not very green of you or whatever. Because I was talking about uranium stocks, because I saw this thing that was the White House put out this thing about they're doing something with looking at sustainable nuclear energy, and said, hey, I want to check it out. And JP came back and says, why, solar's where it is, wind, all this kind of stuff.
Well,
it made me think about,
part of my, there is the ethical aspect of nuclear energy, but
you don't have any ethics.
I don't think economically, I don't know if uranium is going to really be a high growth stock.
Right. And I don't know much about it, so it's not like I'm putting money. So here's the thing, when it comes to social responsible investing, there actually is, and we can pull it up here, is that JP showed us Yahoo Finance, and talked about how Yahoo Finance has it's a great place to just check something out. So what I wanted to show the viewers is that if you go to Yahoo Finance, there's a button on here at the very end, right at the end. It's called sustainability. This is basically, it measures what people call the ESG scores. So the ESG scores is basically environmental, social, and governance. And what these categories are depends on if you're looking at a product or a stock or a company that you really like and you're not quite sure about it. But you have what's really important for you is making sure that the company puts a lot of money in environmental causes, or there's a specific charity or fund that you think that's really important, or the governance level is making sure that they have really strong corporate social responsibility is important for you, or that they hire very diverse things, or they make sure. So there's basically whatever political or economic reasons.
Yeah.
There's a lot, and you're never going to find one that's like 100%. So this is where it comes down to, is that you have to kind of pick, when you're looking at trying to investing in something, pick what's the most important for you. Pick what's the most important thing for you.
You know what the ones that are 100% are called?
What?
Nonprofits.
But only some, and they're not publicly traded for some reason. That's weird.
I mean, so you're not going to have, if you're looking at for a company, find out what's really important for you and utilize that. And what you can do is kind of determine what their ESG score is. There is Sustainalytics, which is a aspect of that's a part of Morningstar. You want to talk to your friendly local financial advisor and saying, if you're interested in looking at individual stocks. First of all, as we always said, we're not here to give advice. We're not here to tell you what to buy. But the piece of it is that what you should do is the money you need to save for retirement, have a financial advisor help you out. Once you establish having a financial advisor through your friendly local financial advisor, they have access to Morningstar. And then what you can do is pull up and ask for like some individual stocks, their sustainability, their ESG rating, and they'll have a big packet. You can go as deep as you want to find out what information they have on it, like if they're better at planting trees, or they have they support diversity among their workforce, or whatever the situation is.
Well, then you can also, so everyone should have a financial advisor, right? I mean, everyone. Yeah. And one of the things that you can say to that financial advisor is, hey, I want to gamble in the stock market. How much can I afford to gamble with? And they'll give you an honest appraisal, and they might even give you a good platform to go on. These are professionals that have a lot of they've got a lot of coursework, they've got a lot of experience, they have a responsibility to help you out, and the value they have cannot be measured in dollars alone.
Right. And so if you just kind of want to look at like a snapshot of what they would look like, you can go to the sustainability section on Yahoo Finance. You can click on that. And we always use GM as kind of like our gold standard of, and right here, you look at, it says right here, down here, their controversy level is high. So not sure what's on here. Their governance risk score is 7.9, social risk score is 12.7, environmental scores almost none. So, and it shows here a little dot on where their peer average is a 2.6. So, give you an example. We love talking. Another one we talk about is Tesla. Tesla is a 3. GM is a 4. So Tesla is still considered significant controversy level compared to their peer average. So, and it looks like their social risk score is higher, which means they're better at social and the governance risk score, but their environmental risk score is much lower. So,
can you see who is at the top of the rankings? Just
not without looking at. I think you have to have like an actual login, but like Morningstar itself, where you'd have to have like a subscription to Morningstar. And as I say, your friendly local financial advisor has access to all this information, so they'll give it to you for free. You just say, "Hey, give me the ESG score. Can you give me the ESG scores of?" And then pick some companies that you might be interested in investing in. So, and then you take that information and then kind of decide on, I'd like to look at these individual stocks. The caveat is, and this is the one downside, and I know we haven't really jumped in and talked a lot about index funds, ETFs, and mutual funds. We'll save that for a later episode. But basically, we kind of mentioned last episode is index funds, ETFs, mutual funds is basically the equivalent of going to a Chinese buffet, and you got lots to choose from. They get a whole plate of it. So the downside of finding social responsible SRI-based index funds or in these funds is that they're not all going to fit with what your values are. So you might have a good chunk of them. Like you might have one that's all green, but they might not have, they might not support diversity as much as say like a banking institutions that might have a couple that are really support that.
The
So
conundrum with this is that usually companies that are really big on the social responsibility and really focus on that aren't as profitable as the ones that are not. And that's an unfortunate reality in our economy or in capitalism, I suppose.
Right. It depends. It depends, because you think about the ones that are like that kind of like love destroying the environment, like the Deepwater Horizon situation. Their shares plummeted, so it's not, so it depends.
There are costs involved, and
Right.
I think in the long run you'll find that those companies aren't as profitable. But when you're on a quarter to quarter basis,
Right.
really exploiting your workers does a real doozy on the old bottom line and share price. So,
Yeah. Well, I think
a good investment on the face of it.
Right, and at the end of the day, I've said this not on this show before, but at the end of the day, your vote with your dollars is the only vote you have that really matters, and that investing as well. Are you comfortable putting are you comfortable when you buy a stock, you're saying, hey, I have faith in this company for one reason or another, and you are saying, I want this company to stay around. If the company is doing some stuff that you're not in, that you're not comfortable with, don't put your money on them, no matter how profitable they could be. I mean, if there was a company out there that, was exceedingly profitable and sold, monkey brains, I probably wouldn't invest in that company anyway, because I don't think that we should kill monkeys to sell their brains.
That's a good point. Yeah.
Because I'm awesome at analogying.
So
because you feel
by the monkeys? Of course I do. That'd be ridiculous. I saw all those movies.
Hey, let's remind everyone to subscribe to our premium channel, though.
Our premium channel where we have deeper discussions about all things Planet of the Apes. And mostly we discuss our favorite flavors of crayons.
That's right. There you go. So that's one point we talk about. JP did a great job chatting with us a couple episodes ago on due diligence and also looking at how to read some charts, which is really important. So looking at the long-term viability of a company is important, obviously, because if you're investing in it, the actual verb itself means that you plan on seeing success. But the other point is that you realize that what's really important for a lot of people is also they want to make sure that, as Mike was saying, there's value in speaking with your wallet, voting with your wallet by saying, I trust this company. And what I'm doing is that, like, I'm not putting my money into any SRI like funds, not in the index funds or ETFs, because I am very specific on what I find that value in, which is, levels of, diversity and women in leadership, and also environmental things is really important for me as well. So I'm looking at that through my friendly local financial advisor for the stocks that I look at, or the stocks I have now. That actually might be a decision I need to make to say, I didn't know they did that. Like, I'm going to probably put my money someplace else now. So you want to make sure that you're also sleeping well at night at the same time with help making those decisions. So, great. Anything else to add for that?
No, not really.
Good.
I've said everything I need to say about that.
All right.
Monkey brain's bad. Other things good.
All right. So what we're going to do now is we're going to talk about what we're watching, what we're going to be watching next week. Mike, did you want to go first? Oh, go ahead.
Well, we can let Mike go first. I was just going to say I'm using this downturn in the market as a chance to reallocate my entire investment portfolio. It's super heavy on options, which I took a bath in.
So buy more.
I did have some long calls that didn't decline hardly at all. So I was able to sell those long calls, preserve that profit, and then use that to buy the dip, so to speak. So some of these positions I'm in that I'm really buried in, like CBAT or GOEV, Canoo, I'm doubling down my positions, on the hopes and dreams and wings and prayers that they come back up to where they were before, and I'll be able to recoup my losses.
All right. So we're talking about next week. I'm watching ViacomCBS. Mike laughed at me when I told him I was gonna put some money into this one, and I did do. You know what I did? I did start looking at how what their ESG rating is on that stuff. So, once I started doing that, so I did see that they are low risk. So that's good. So
low risk, low reward.
Yeah. Yeah. Low risk meaning like low. Yeah,
I know what you
score. They have a good score.
I don't think Mike is.
I'm busting chops.
Wrong. He's wrong. He might be right.
That's kind of the way.
So here's the thing. The reason. So this is my reason why I'm putting some money into ViacomCBS is a couple things. They just had their quarter calls where their investor call. And they also have Paramount Plus coming out, and they're the parent company for Paramount Plus. So Paramount, yes, it's going to be another streaming service, but I see that it's a market. It's the equivalent of, I would say, HBO Max, not Disney. They're never going to be up to Disney. They're never going to be up to Netflix. Netflix is knocking on $600 per share right now. Disney is hovering around $200. Viacom is now at $60. I am confident that it's probably going to at least hit 80 or 90 by the end of the calendar year, because I think it's a streaming world out there. They own a lot of IP, as we say. They got Indiana Jones, they got Star Trek, they got
nobody cares about Indiana Jones.
I love Indiana Jones.
Like, seriously, what is your
they got James Bond. They got all kinds of stuff. So that's why.
Yeah, your granddad liked James Bond too. Like, come on, man.
CBS does own 1/6 of the U.S. media consumed in the country, so there is potential for growth there. There are some returns to be had.
Yeah, so
it's you got to lay out a lot of capital to get those returns. That's my only hesitation.
Right.
With
it's a long term, as I say. I think it's going to one. So, Mike, AMC, you want to talk about that? That's I like the stock. So it's not only is it movie theaters, right, but it's also got some IP. Most of which is on Netflix and other places. They also there's also been like these goofy rumors about talks with Amazon, which I think would be a pretty strong move for them. And in the short term, movie theaters are opening back up, right? And I think that. And not to mention the fact that it is kind of a meme stock. There is a goodly bit of short interest in this stock, so there's lots of shorts on it. It could squeeze, and I'd be happy if it did. But at the end of the day, I still think it's going to be okay. But long-term Sensonics is still my girlfriend, so that's how it goes. And JP, you said you're watching this week at Ferroglobe?
Ferroglobe, yes. Ferroglobe is a mining company. We talk about that ESG stuff. It is a mining company.
Yeah. Look at their ESG score.
However, there's some. So Ferroglobe is a stock that was trading for, I don't know, close to $20 a share back in 16, 17, and they really got pummeled by some tariff changes in Chinese imports. Tariffs were lifted. There was some kind of a trade deal. And it became much less expensive to import silicon and the other metals required to make solar panels, to get that stuff from China than from the United States. The Biden administration has just, as well as the EU, have just reinstated some tariffs on the Chinese materials, which has made the long-term outlook for Ferroglobe's profits go sort of through the roof. Stock price hasn't quite realized this fact yet, but I think in the next 6 to 12 months, we're looking at back up to $20 a share with them, and they're at $3, $3.50 right now.
Yep. $3.70. Yeah.
$3.70. Okay. Yeah, I turned the stock market off Friday afternoon. I
Because you were weeping in a corner.
I couldn't bear to look. So,
You know what? I kind of did too. I was awful salty about dumping GameStop early.
yeah, you're kind of Mike. I think we might need to have an intervention. I feel like you might be addicted to short squeezes.
I really am.
I just I don't know. I'm a little worried about you and your portfolio.
I'm still just playing on house money. So if it and I'm actually profitable with it. Like after the big dump I took initially with GameStop, I'm back up to like just over $1,000. So.
All right, yeah. So Thomas, the ginger cat, did ask, "What's your best flavor of crayon?" So that's good.
my best flavor of crayon is orange.
All right, thank you very much, everybody, and we will see you next Saturday, 8 p.m. Eastern Standard Time.